Hi. Welcome, everybody. Welcome. If you're hearing the sound of my voice, just type focus in the chat. If you're hearing the sound of my voice, just type focus in the chat. We will get cracking very soon. Focus. That's it. Let me know where you're calling from as well. Let me know where you're calling from as well. I see Southeast London is in the building. Dallas, Texas is here. Welcome. Essex is here. Welcome. Sweet Tobago in the building. Welcome. Canada. Welcome, Canada. Nigeria is here. Welcome, Nigeria. We have Canada again. We have another Canada, Bolton. Welcome. Sweet Trinidad and Tobago, welcome. Excellent, everyone. So, last week was rather interesting. We actually ended it off on a positive note with a beautiful buy on gold. We'll switch it up. Uh-oh, what have I done? Yeah, we ended it off with a beautiful buy on gold. And there was a non-farm payroll, right? For those of you who, let's let a few more people in. Right, for those of you who are following the fundamentals, as we should, it was non-farm payroll last week. And as such, there was a little bit of hesitancy in the beginning of the week. Then we had a little bit of a up-down scenario. All right. But we ended it off quite nicely with this beautiful trade right here. Right at the entry here, that went for over 490 pips, at least to our take profit targets anyways. But if you held it, right, you would have been over 800 and something pips in profit. What's the reason why we were buying here? Let's have a look. Right. Let's have the video on. Yes, sir. Okay. So why were we buying? I'm going to go back to last week. All right, so the first week of March is gone, people. Gone. Okay, right here. So the non-farm payroll was actually a negative for the US, and it was a lot negative, right? It was a lot negative. So even the unemployment rate was negative as well. But that non-farm payroll figure was hugely out of sorts. And as such, this is why I went in for the buy on gold, okay? US is going to be negative. And in fact, any of those like GBP, USD, AUD, USD, anything like that, they should have been pushing up after that non-farm payroll figure, right? As we could see here, right? We did have a nice 1-2, and the market settled and gave us another. This is actually a 1-2-3, right? Because it's, if you understand the strategies, even if you don't understand what we're talking about when it comes to 1-2s or 1-2-3, that's okay. When you get involved, you would learn the systems, right? So this was a 1-2, this was a 1-2-3 here. But as you can see, the news is what really helps to push the market in one direction or the next. We just use the 1-2 or the 1-2-3 to get in that direction that the news is pushing, okay? So personally, my bias is that this will continue to push up, but let's go back to what is going to be happening the week ahead of us. Okay, let's go back to that. Congratulations, all those people who send in testimonials as well. I think I got at least about 4 testimonials already last week. Incredible stories coming through. And I'm sure we'll hear from these people at some point. I don't want to give it too much away. All right, so this week coming, we have still a lot of US news, CPI, which is inflation. And then we do have GDP figures for the US and also for the pound. So the major players are going to be the US and the pound this week, right? And of course, gold, because of what's happening in the global news, right? With all these wars and everything else. So GBP USD, as I said, GBP USD would be pushing up after that non-farm payroll, but also AUD USD. Right? Right, non-farm payroll is usually around 1:30 UK time, so just around here. Right, 1:30 UK time, just around here. That's when the news dropped, and then the AUD USD hasn't really reacted that much. Right, this is why I kind of leave these currencies alone. Gold gives us enough. The currencies just move really slowly when you really get into gold and really get into the indices. NZD USD. Right, again, we had that positive move to the upside. So what is my bias? My bias is for a continuation to the upside on these things. But of course, we've got to now use our 1-2s and 1-2-3 strategies to be able to get in on the market at a decent price, okay? At a decent price. So let's just go back to gold, for example. Yeah. So there we go. So from this setup, we didn't really get any other setups to get in for the buy. We really just have to wait for price to settle in and for the market to give us that 1-2 or 1-2-3 strategy to be able to get in. Other than that, right now, I am sitting on my hands. I am doing absolutely nothing, right? And doing nothing is a trading position, right? That is taking a position. And in most cases, that is saving your account. People just love to take a trade for no apparent reason, just because the market is there. But we've got to be disciplined. As I said in the group before, all we're doing is we don't care whether the market is at, well, we sort of care, right? What direction the market is going in terms of like where the fundamentals is going to push it. But in terms of when we're going to enter, right, we're waiting for a 1-2 strategy or a 1-2-3 strategy. That is it. We're not doing anything else, right? We're not being impulsive. We're not saying, oh, we're going to jump into the market just because the market is going up right now. Oh, I'm going to miss move. I'm going to miss the move. Trust me, the market is always there. And it's better to be out of a trade wishing that you were in than in a trade wishing that you were out. So sitting on your hands is key, okay? Now, there was one little play outside of the 1-2 that we do use from time to time, and I'll show you here. It actually happened on gold, right? You see where we've got the fair value gap marked off right here. We could actually switch that on or off in the mood swing settings. So if we go down to the settings here, you see fair value gap. If I switch that off, you would notice that this actually goes away. I could switch it back on. I could actually extend it as well. So let me extend it. Let me put it for like about 20 or maybe 15 candles. Right, it was just set to 1, but I'm just putting it to 15 candles. You'll see what happens in a minute. Right, you see it extends out 15 candles forward. Right, so as you can see here, what happened is the price actually came back into this fair value gap here. So even if you miss this initial move, there is a fair value gap trade that we could take as well. I know it's not a 1-2 or 1-2-3, but then this is another feather we could add to a cap. Fair value gap trades have been playing out quite nicely. And for the sheer fact that, hey, we saw the fundamentals, we saw that the US was negative, price had really pushed up like crazy. Because of that, hey, I might have missed this move, pull back to fair value gap to give me another entry to the upside, okay? So there we go. I mean, we do have another little fair value gap here as well. So, you know, who knows? That might be another pull to the upside. Right? We're back in some very old supply areas here, but I wouldn't really fuss too much about that. Okay. I'm still pretty much biased for gold to keep pushing up because of the fundamentals and because of the sentiment of the wars and that's happening right now in the Middle East. That's just my take. Any questions at all?
Can you go over the fair value gap again?
Sure, no problem. So let me actually just switch it off for a minute, and I'll kind of explain the theory behind it. Okay, so I'll switch that off. Okay, so what is a fair value gap? Theoretically, a fair value gap is created when the price pushes in a very strong way in one direction or the next, right? And what it does, it creates what we say a gap from the top of, I'm just going to do it manually, right? The top of this candle right here to the bottom of this candle, okay? All right. I'm just going to do it manually. Right in here, right? So the top of this candle to the bottom of that candle would have created a gap in there. When we say a gap, it just means that this candle didn't come back to the top of that candle to fill in that, what we call liquidity in the market, right? The market just continued pushing, right? So it creates a gap in there. So that is me just doing it manually, okay? But the mood swing tool will do it automatically for you. The same thing just in here, right? The top of this candle, right here, bottom of this candle right there, right? There is a gap in between there, right? So there would have been, right? There would have been a gap at the top of that candle and the bottom of this candle here. But notice price came back into that area, into that zone, and then pushed up, right? So that gap had been filled in, okay? So usually the market likes to come back into those zones. It's almost like a magnet to fill in that gap that was created by that big push of liquidity into the market, okay? And it happens time and time and time again. Look, even here, let me show you here. The bottom of this candle to the top of that candle, that was a gap. And look at what happened. See, price comes back into there, taps it in, and then it drops. So those are areas that we shouldn't necessarily ignore. So it's always nice to switch it on with the mood swing tool. So that gives you some nice entry. So if I switch the fair value gaps back on now, right? So you don't have to do it manually, just let the tool do it for you. So you see here, right? It's done it for you automatically. So you don't have to do it manually. Back in the days, we had to do this manually. Now you're spoiled. Okay. So, you know, a potential for a price to come back into this, tap into that zone, and then do a continuation into the bias that we have, which is potential for a buy. Okay. So don't ignore the fair value gaps at all. I mean, let me see if I could find. Oh, let me tell you this as well. Whenever we have a gap in the market like this, so when the market gapped up, this week we could consider that also as a fair value gap as well. Okay, just in here. But you notice it kind of came back down. It actually had a little bit, it came back a bit further down, but then we had a reaction off of that. So that is something to keep in mind as well whenever we have a gap in the market. Okay. We have a gap here. I think this gap was probably filled in. Okay. But notice with the gaps, price actually fill the gap in and then kind of sweep liquidity at the bottom of the gaps as well. So keep that in mind, right? So we had a gap right here. Now, all of this is just technical analysis. So see, price comes in here, but it swept the candle below that. Right? It swept below that candle here, right there. Right? And pretty much the same thing down here. Price actually swept below that, right? Came down below that, grabbed that liquidity, and then continued pushing to the upside. So that's a fair value gap as well, but just note that we could probably see a deeper stop hunt below that before pushing up. Okay, see if I could find any more, but you know, you would see them, you'll definitely see them from time to time. Look at this one here as well. This is another fair value gap here, from here to here. That's a fair value gap, and look at what market did. Pushed up into that area and then dropped, right? So always keep a note of that. This is another fair value gap here, from here to here, and look at what market did, right? It came up into that zone and then dropped. Okay, so very very interesting stuff, right? We had a big gap in the market here. Okay, we had a big gap in the market here. Again, market eventually came back into that area. But as you could see, we had a deeper liquidity sweep. And you know why that's the case? Why do you think that we have a deeper liquidity sweep here where these gaps are? Why do you think that is the case? That's the
Can I
question.
comment?
Yeah, no problems.
Because stop on there by orders there.
Exactly, right? Yeah, it's the fun thing. Because everybody is looking at this gap and saying, oh, it's gonna fill in, right? So let's buy here, let's buy here. And of course, they've got the stop losses down here. So it is a liquidity hunt. So exactly that. Exactly that. All right. Cool. So I hope that answers the question, Dwight. Is he there?
Yes, it did. Yes, it
Okay.
did.
Okay, cool. Great. So, what else are you guys looking at? Hold on. Before we go, oh yeah, we looked at this already. Oh, we have the Japanese yen. We haven't really looked at stuff for the Japanese yen just yet, but we do have the GDP for the Japanese yen that's going to be coming just about an hour and a little bit after the market has opened up. So this is actually quite interesting. We haven't looked at anything for the yen just yet, but let's actually look at the yen in isolation for a minute. Right, okay. So the yen had been falling out of the sky. I'll go for daily. Okay. Yeah. So we're just looking at the yen itself, right? This is the yen currency alone. Or the yen index, the JPY index. We can see that it's been very weak for quite some time. We go all the way back, scroll all the way back. The yen, this is like COVID. This is COVID times, 2020. And the yen has just been falling and falling and falling and falling. A little bit of recovery here. This probably just had to do with the government stepping in and buying some of the yen bonds, but then eventually gone back to falling. So in all intents and purposes, the Japanese yen is pretty much on the weak side, right? That being said, there might be some days where it strengthens up a little bit and then it's going back down. But for the most part, right, the yen is weak. Okay. So when we're looking at currencies, it's always good to separate the currencies out because currencies is the only asset where you could pair one asset against the next. And that kind of gives you a little bit of an advantage. But only an advantage when you understand what is happening in one economy against what is happening in the next economy. Okay. So let's go to something like GBP, JPY, for example. Okay. So let's reset. Right. So GBP, JPY. And last week it was literally not doing much, but then we start seeing a breakout to the upside. Personally, I'll be looking for a continuation to the upside here. So again, what I want to do is I want to put on my mood swing level and I'm just going to look for some movements to the upside. We do have a fair value gap in here, so there's potential if market comes back down into that area that we could look for a continuation to the upside. So, but we had some nice 1-2s here and 1-2s here as well for the buy on this GBP JPY. Even on Thursday, this was a nice 1-2 here for a buy to the upside. Right? And if you took it even just up to the mood swing level, that's 60 pips in the bag. Okay. So we do have, yeah, I'm gonna wait. I'm gonna wait on this one. Wait until the news drops, right? We do have some JPY news that's gonna drop. Now it always have to do with whether it comes in close to this forecast figure or miles away, like similar to what happened on non-farm payroll on Friday. Okay. So wait for this news to drop, wait for the market to settle. Remember that they're always using the news to do some sort of stop hunting, liquidity hunting. So you just have to calm down. Don't try to predict anything. Just let the news happen. When the news happens, you could look at the figures and then you could make an objective, calm, and peaceful decision as to whether you're going to take it, whether it's actually giving you the opportunity to get in, or if it's gone already, or if it did a stop hunt. But you want to be able to trade with lots of peace, lots of clarity, and lots of calm. One thing that one person told me after coming on board with the MOODSWING tool is like, I'm sleeping better now. I could walk away from the chart. I could have showers now. I'm not glued to the I'm not glued to the chart anymore. That's what you want. You don't need to be glued to the chart. You want to be as free as you possibly can, and very calm when you're executing your trades. You see a 1-2, you see a 1-2-3, you take the trade. You don't see it, you leave it alone. The market is always there. There will be an opportunity. Now, one of the things that a lot of people are actually saying that they're having a lot of success with is setting this alert, right? So if we go to alerts here and we go to the MOODSWING, you could set your alerts. Now, right here, this one, a bullish internal order block breakout or the bearish internal order block breakout, set alerts for these two, right? A lot of people have been having a lot of success with that. Okay. We do have these others here, which is the internal bullish order block breakup structure, this one, and the internal bullish order block change of character. You could try with those as well, but with these two, a lot of people have been having some success with that. The internal order blocks, you could use these internal order block alerts to definitely help you out with timing. Okay, so feel free to do that. And then, of course, you could get it to notify you in your app, from your email, to send you a notification within here if you want to, etc., right? So play with that. And I would set it as well to once every minute, right? Once every minute, so that it keeps alerting me and alerting me and alerting me. And I could switch it off, right? So I'm going to do that. Just going to do a bullish internal order block break and just hit create. Notice it will be on the 15-minute time frame as well. Whichever time frame that you're on, that's where it's going to be. And I'm just going to do once every minute for it to alert me and then hit create. Okay. So you'll see your alerts list in here. And you can see here that when the price broke the bullish internal order block, it will send me an alert. Okay. So do these things, experiment with stuff, and you will be fine. Okay, so I say the first thing that we do is keep an eye on the JPY, because that's going to be coming soon. And then after that, really is Tuesday. Wednesday is where the real action starts. Wednesday is the inflation rate for the US. And then Friday, GDP for the US and the pound. Okay, so we stay vigilant. We stay active in our private and exclusive community. And for those of you who may want to get yourselves going, just drop me a message. I'll send you the link in the chat. Drop me a message in the chat, and we will get you up and running in no time. Right? So drop me a message in Telegram there via that link. I've just dropped it into the chat, and we'll get you up and running in no time. But other than that, we're going to wrap it up there for the minute. All right? JPY is the one we should be keeping a focus on, just because we've got news coming. All right? Drop me a message, right? Because we had some people come into Telegram and into the Telegram group, and they were wreaking havoc. They've stolen my name, they stole my picture, they created a new group, they were selling some bot, got people across from the group into that group, and they thought it was me. And yeah, so Telegram is a interesting place. So send me a message personally, and then we could get things sorted there. All right. But other than that, I wish you guys a fantastic evening, and see you on the inside soon. All right, because a lot of people are really seeing a lot of success. The light bulbs are switching on. All right, and yeah, bye for now.